This quarter, Coromandel delivered a robust financial and operational performance. Revenue from operations stood at Rs 4,088 crores, marking a 27% year-over-year increase. Profit after tax surged by 253% to Rs 578 crores. EBITDA grew 56% to Rs 426 crores, with margins improving to 9%. For the full fiscal year, revenue crossed Rs 24,000 crores and PAT grew 25% to Rs 2,055 crores. The company remains debt-free, with a net debt-to-equity ratio of 0. Coromandel's fertilizer business scaled up significantly. Manufactured volumes rose by 12.5% and imported volumes nearly doubled. Market share improved from 15% to 18%. Despite commodity cost pressures, EBITDA per ton guidance remains between Rs 4,500 and Rs 5,000. Expansion into northern and central India made Coromandel a true pan-India player. Backward integration continues at pace, with phosphoric and sulfuric acid plants under construction in Kakinada, expected to be commissioned in FY26. The crop protection segment recorded 7% revenue growth to Rs 2,637 crores. EBITDA improved 25% to Rs 363 crores. Export volumes grew 9%, while domestic B2C sales saw 24% volume growth. New products contributed 21% of formulation sales. Bioproducts also performed well, expanding into non-azadirachtin extracts and launching microbial fertilizers. R&D capabilities in fermentation have been enhanced. Coromandel is acquiring a majority stake in NACL Industries. The plan? Restore margins, leverage CDMO capabilities, and align R&D and brand synergies over the next 2 or 3 years. Coromandel's retail business expanded with 130-plus new monogromor centers across Andhra, Telangana, Karnataka, Maharashtra, and Tamil Nadu. Now, 99% of stores are profitable. The break-even time has dropped to just 6 months. Digital outreach via the MyGrowMore app continues to grow. Specialty nutrients like water-soluble fertilizers and organic variants saw consistent growth and 18-20% EBITDA margins. Plans are underway for backward integration of key raw materials. Nano DAP is emerging as a future growth engine. In FY25, the company sold 26 lakh bottles and achieved over 80% liquidation. It is estimated that Nano DAP could replace up to 2 million tons of conventional DAP over the next 2 to 3 years. Coromandel has also received approval to export Nano DAP globally. India's agriculture sector grew by 4.6% this year. Food grain production is up 5%, supported by strong monsoons and reservoir levels. Forecasts for the upcoming Kharif season remain positive. Input costs like sulfur and phosphoric acid have risen sharply, impacting short-term margins. However, government subsidies were adjusted to compensate. Coromandel received Rs 8,082 crores in subsidies during FY25, and pending claims are minimal. Key challenges include raw material price volatility. Sulfur rose $120 ton in Q4, and margin pressure in crop protection due to pricing erosion. Regulatory clearances for some facilities, like Ennore, are still pending. NACL's high debt and low margins also pose integration and turnaround challenges, though management has a clear roadmap. Analysts focused on turnaround strategy and capacity use at NACL, outlook on Nano DAP adoption and exports, retail and specialty growth potential, timeline for CapEx project completion, and margin guidance in light of rising input costs. Management reiterated confidence in reaching their EBITDA and capacity goals, and emphasized synergies across brands, products, and R&D, CapEx projects. OS acid sulfuric acid to be operational by Q4 FY26. Nano DAP export potential to be unlocked in FY26. Crop protection expected to deliver high double-digit growth. Long-term target: bring fertilizer and non-fertilizer profits to 50,050 mix. Subscribe for more earnings breakdowns. The information presented in this video is for educational and informational purposes only. It should not be considered as investment advice or a recommendation to buy or sell any securities.